Joining us now is Chris Weston, Head of Research at Pepperstone. Chris, great to see you this morning. A little surprising, but let's cross to you now. Good to see you. First of all, the RBA left rates on hold yesterday as expected. What does that say about the state of the economy? Is there a little bit more positivity, at least from the RBA, about the medium-term outlook?
Well, I think, one of the things they have been looking at is the external factors, and I think that's what a lot of central banks have been setting policy to, ensuring against downside in the external thing. And I think, what we've been seeing in the US-China relations has been a more progressive situation, a much more positive situation. We're expecting a phase one deal throughout mid-November. The Brexit situation looks like we're going to get, well, on the face of it, looks like we might get a Tory majority and Boris Johnson voting through his deal. But then you go domestically, and yeah, we saw the unemployment rate last time tick down 10 basis points or so, and they believe that we get down to sort of 5% over time. And this Friday, you're going to see the statement of monetary policy, and they should upgrade their inflation expectations to around sort of 2% for next year from 1.75%, although they will probably downgrade growth for this year. But unemployment's okay. They would like it to be much lower than where it is. House prices are moving up. But I think it's the external factors which I think have been very positive, and I think from that perspective the rates are going to be on hold for an extended period of time, although they still see a chance that they will set policy and lower policy if needed.
Yeah, Chris, I think retail, I suppose, those retail figures that came out this week were very interesting and have obviously given critics of the government's economic policy quite a fair bit of ammunition. What do you expect to happen there, particularly in the next few months as we enter the busy Christmas period, a crucial time of the year for the retail sector? I mean, you would expect there to be a bounce, right? And how closely will the government be watching this?
Well, the government have to be watching it. I mean, there's something that I've probably missed out in that last question was what the RBA said about consumption, and they still see vulnerabilities in consumption. Obviously, they'd like to see that much higher, as any central bank would do. So consumption is definitely something we're watching. The retail numbers the other day, as you rightly point out, we're up 20 basis points. The market was looking for 40. So, this is an area where you're going to see deep discounts. I mean, it's probably a good time to be a consumer because, the tax cuts have obviously not really done much. There's still a lot that needs to work its way through the system there. And there's still more that's going to have to be played out over the next few years. But, the consumer needs to come to the party right now. And, there's no real pickup in credit. The banks would obviously love to see that. That's part of the reason we saw Westpac, cutting its dividend. The lower rate environment's been pretty bad for those guys. It needs to be offset with higher credit. That hasn't happened. So I think we're in for a period of deep discounts again for the Christmas period. For me, that there's no doubt about that situation, given how the consumer's not come to the party at the moment.
Wouldn't it just be a bit of a false dawn when we look at consumer confidence and retail trade over Christmas? I guess it gives the economy a bit of a shot in the arm for that period, but it's a bit of a Pyrrhic victory, I would have thought.
Yeah, and I think this, economists will look at, seasonally adjusted figures and various bits and pieces. And yeah, you have to read through the noise and look at the seasonal adjustments that come through. So yeah, I mean, obviously we'll look at how retailers have fared relative to this time last year, and you look at it against the previous corresponding period rather than, what happened in January, for example. So yeah, look, you have to, when you do see these numbers coming through Christmas, you want to see how they've performed on a relative basis more than anything else.
Chris, the Aussie dollar stretched from 67 cents to 69 cents. How much further do you see that going?
We've started to see the last couple of days a bit of a re-emergence back into the US dollar. The world is improving. You're seeing a really quite aggressive sell-off coming through in bond markets at the moment. It's part of the reason why gold prices are a little bit lower at the moment. But last 4 days, we've tried to push above 69 cents in the Aussie dollar, despite rate cuts being priced out of the market. And traders have just come in and sold straight into that. So, look, we're not expecting too much higher levels. I'd be a very aggressive seller of the Australian dollar if we got into 70 cents. But last couple of days, every time we tried to make a move above 69 cents, then, we've sold into that. But the Australian dollar is not a reflection of what's happening in the Australian economy, as perverse as that sounds. It is a vehicle for traders to use to express what's happening in emerging markets, and also the relationship between the US and China. As we've seen a better and a convergence between the US and China, traders have gone out and bought the Australian dollar as a vehicle for expressing that view. It's not really a reflection of what's happening domestically. It's just a vehicle for people to trade emerging markets and the positivity around that sort of potential trade deal we've been seeing.
Though, Chris?
Well, I mean, it depends. You know, obviously the Aussie dollars, a lot of these goods are priced in US dollars. So in some ways that you'd be wanting to see, you know, the purchasing power being put into the hands of the exporters. So in theory, you know, when a lot of these goods are priced in US dollars, you really want to be seeing the Australian dollar weaken in that capacity. But you know, it's the importers, I think, that would probably be going, well, let's hope for a higher Australian dollar so that we get purchasing power in that capacity.
All right.
Chris Weston, thank you.